Dear students, today I shall discuss the second part of financial analysis and planning. It deals with cash flow statement with particular reference to Accounting Standard 3 revised. First of all, let us understand what is the concept of cash. In the context of cash flow statement, the term cash refers to cash and cash equivalents. Cash equivalents include bank deposits and marketable securities also. Now we would try to understand the concept of cash flow statement. You may please note that cash flow statement is based on the actual cash inflows and actual cash outflows during a given period. The statement shows inflows of cash from various sources and outflows on various uses during the period of cash flow statement. It separately shows calculation of cash generated by a firm from operations. The cash flow statement may be prepared on monthly basis, quarterly basis, or yearly basis. Now let us understand what are the managerial uses of cash flow statement, or what is the utility of cash flow statement. Cash flow analysis is a very important tool in the hands of financial managers. It helps the finance manager in short-term financial planning. A cash flow statement is essential to management in examining short-run financial movement of cash. By preparing projected cash flow statement, management can identify the sources of cash inflows and outflows of cash. In case of outflows exceeding the inflows, management can arrange required funds to carry out operations successfully. If inflows exceed outflows, then management should invest the surplus cash to earn return from such investment. Proper study of cash flow statement and cash flow analysis and its interpretation is very useful for liquidity management of the firm. A firm may have surplus cash in spite of loss in operations. This is very important. It happens because of depreciation and other non-cash expenses and losses charged in the preparation of profit and loss account. A very important aspect of this statement is that it is better understood and appreciated even by those who do not have any accounting background. Now we will talk how cash flow statement is prepared. That we will see as per preparation of under Accounting Standard 3 revised. So, to understand the preparation of cash flow statement, let us keep this in our view that in this paper we prepare cash flow statement as per Accounting Standard 3 revised. Though there are other formats also to prepare cash flow statement, but here we will talk preparation of cash flow statement as per AS3 revised. The standard has not provided any specific format for the preparation of cash flow statement, but a general idea can be drawn from the format of cash flow statement given in the illustration in the appendix to the Accounting Standard 3 revised. From there we can get the idea how to prepare cash flow statement. There appears flexibility in the preparation of cash flow statement. Cash flow statement can be prepared by two methods. Number one is known direct method and another is known indirect method. Now let us see how we are going to prepare cash flow statement as per direct method and indirect method. But before that, let us very clearly understand that direct and indirect method relate to the computation of cash from operating activities. Just we will see what are the segment of cash flow statement. There we will be able to appreciate this aspect of cash flow statement. The total cash flow statement is divided into three parts. Part 1 deals with the computation of cash flows from operating activities. Part 2 is related to the computation of cash flows from investing activities. Part 3 deals with cash flows from financing activities. So there are three segments of cash flow statement. In each segment, relevant cash flows both in and out are shown. However, cash outflows in each segment are written in the brackets to indicate that this is a minus figure. Exhibit 1 and 2 present the pro forma of cash flow statement as per direct method as well as per indirect method. You please have a look on this appendix. This is Exhibit 1, which indicates the cash flow statement as per direct method. As I told you, here what are the components of cash from operating activities? They have been shown. Figures we have not used because it is only an exhibit to give you an idea about the preparation of cash flow statement. The important items appearing here under the heading cash flows from operating activities are: number 1, cash receipt from customers; number 2, cash paid to suppliers. Any item which is resulting in the inflow of cash, that is shown out of the bracket. Any item resulting in the outflow of cash is shown in bracket. Third item is cash paid for salaries and wages. Next item is cash paid for expenses. Next item is cash generated from operations. Generally we think or presume that there will be a positive figure. From this you minus income tax paid. So balancing figure is net cash flows from operating activities. This is segment A of Exhibit 1 under direct method. Now see, these are the components of investing and financing. B item under the heading cash flows from investing activities list fixed assets purchased, it is a minus item. Then fixed assets sold, it is a positive item, it will result in inflows. Next is interest received, it is also inflow, positive item. Then dividend received, all these are plus item. So they have been shown out of the bracket. This is only an illustrative presentation to have some idea how cash flow statement is prepared. Total of that is indicated as B. net cash flows from investing activities. Now, third segment deals with cash flows from financing activities. In this, first item is issue of share capital. It will result in inflow of cash. Then proceeds from long-term borrowings. This will also result in inflow of cash. But if we make repayment of long-term borrowings or loans, then it will be an outflow. That's why it is written in the bracket. Interest paid, that is also your outflow. Dividends paid, that is also your outflow. Total of this is identified as net cash flows from financing activities, identified as segment C. Total of that is written in the outer column. Now we add A, B, C, and then we get net increase or decrease in cash and cash equivalent. We indicate in the bracket again A plus B plus C. Now to this item we add cash and cash equivalents at the beginning of the period, and the ending figure will be cash and cash equivalents at the end of the period, whatever is the period of cash flow statement. So this exhibit 1 indicates the preparation of cash flow statement as per direct method. Now let us have an idea of indirect method also. You see this exhibit 2. This is showing preparation of cash flow statement as per indirect method. Number 1 item, that is cash flows from operating activities. This is basically different than what was in exhibit 1. Here we start from net profit before tax and extraordinary items. To this item, we make adjustment of non-cash and extraordinary items, which may be depreciation, goodwill written off, loss on sale of machinery, etc., profit on sale of machinery, etc. This will be a positive item. Interest paid, interest and dividend received, and then we get operating profit before working capital changes. In other words, we will see later on, when we prepare fund flow statement, this is also known funds from operations. Now to this item, we make adjustment for changes in working capital. In fact, we can say we are now making adjustment to this item for changes in current assets and current liabilities. So increase in sundry debt creditors, increase in provisions for bad debts, decrease in stock, increase in sundry debtors. All these are adjustment items which are adjusted to operating profit before working capital changes. Note one very important thing: any positive item is written without bracket and negative items are written in the bracket. In other words, minus items are indicated by bracket. Now you have cash generated from operations. Now from this you deduct income tax paid. Balancing figure will be cash flows from operating activities. This is item A. What was in exhibit 1 under the heading cash from operating activities, it is a substitute for that under indirect method. Now see in this exhibit part B and part C. They are basically the same as they were in exhibit 1. As I told you earlier, that basic difference is only in the case of computation of cash flows from operating activities. Other items in the cash flow statement remain the same, whether it is direct method or indirect method. Now we will see how cash from operating activities is calculated. First we will see as per direct method. It is same based as per the items given in exhibit 1. So number 1 under a direct method is cash inflow from operating activities. This represents the excess of cash revenue over cash expenses as we detailed in exhibit 1 just I showed to you. Now from the balance item, income tax if any will be deducted to arrive at cash from operations. This is again the explanation of exhibit 1. Now see computation of cash from operating activities as was shown in exhibit 2. The same is illustrated or explained here as per indirect method. Number 1 item is operating profit. It is adjusted for changes in individual, changes in current assets and current liabilities, decrease in current assets and increase in current liabilities is added, increase in current assets and decrease in current liabilities is deducted. Now you get cash from operations before tax. From this you deduct tax and the balancing figure will be cash from operations. This is in fact elaboration of the exhibit given to you earlier. I just explained you exhibit 1 and exhibit 2. Now we will see a practical illustration to compute cash from operating activities as per illustration 1. So this illustration 1 will help you to understand how we compute cash from operations as per direct method as well as per indirect method. See the items in this illustration. This information relates to Ashok Limited and you are required to calculate cash from operating activities using direct method and indirect method. This is income statement for the year ended 31st March. First item is net sales. From this we have deducted cost of goods sold, depreciation, salaries and wages, operating expenses, provisions for taxation. Total of that comes to rupees 24,48,000. Net sales were 25,20,000. From net sales we deduct all these items, then we get net operating profit. This is the information given to you in the illustration. Further, you get some items relating to balance sheet. So this is the extract from the balance sheet for year 1 and for year 2. Now he has given you current assets and current liabilities which relate to debtors in the beginning and at the end, stock in the beginning and at the end, sundry creditors in the first year end and second year end. All these items are yearly based. Then outstanding expenses at the end of year 1 and then at the end of year 2, and then income tax payable at the end of year 1 and at the end of year 2. Now he has further told you, you can say that this is an extra item given to you, extra information. Cost of equipment sold during the year rupees 72,000. Now this is the illustration from which we will prepare cash from operating activities as per direct method and indirect method. Now please see the solution. First we are doing as per direct method. First item is main heading is cash flows from operating activities. Now see the items. Number one item is cash receipts from customers. This is given in working note 1. We will just see after completing this. I will show you how this item has come. Here you see the item. This is 25 lakhs 2000 rupees. This cash we have received from customers. Working note will explain you how this item has arrived. From this, we deduct cash paid to suppliers in working note 2 and 3. I will just show you working note 2 and 3. Total of cash paid to suppliers comes to rupees 18 lakhs 19,200. Next item is cash paid for salaries and wages. This is given in the illustration. So no need to calculate this item. This is 2,40,000 already given in the illustration. Now cash paid for expenses. This we have calculated because there were some adjustments required. So this appears in working note 4. I will just show you all the working notes. This item comes 56,000 rupees. Total of this comes 21 lakh 15,200. Cash generated from operations comes 3 lakh 86,800. From this we deduct income tax paid. It will be shown again in working note 5, 86,800. Now you get cash from operating activities, rupees 3 lakh. Now we will also see the same calculation as per indirect method. So now you see the solution as per indirect method. Before that, I will show you all the working notes which we have used in the preparation of cash from operations as per direct method. Number one item is cash receipts, collection from customers. There we have already indicated as working note 1. This item is arrived at what were the amount of debtors in the beginning. To that we added sales in the beginning plus what we sold comes to 26 lakh 88,000 rupees. From this we deducted debtors at the end 1 lakh 86,000 given in the illustration. Now what we have collected from debtors during the period comes to 25 lakh 2,000 rupees. So this is working note 1. Now see working note 2. Now this, because here we will be finding what is the amount of purchases. Stock in the beginning was 1 lakh 5,000 rupees. Cost of goods sold added 19 lakh 80,000 rupees. Total comes 20 lakh 85,000 rupees. Now from this we minus the stock in the beginning, that was 2 lakh 71,800. Balancing figure is purchases during the year. This information will be used when we calculate payment to creditors. Now you see these working notes can be prepared in the statement forms as I have shown you here, or they could be prepared in the T form of accounts also. It is one and the same thing. Now what we paid to creditors or suppliers of goods. Creditors at the beginning 2,40,000 rupees. Purchases I just showed you Under working note 2, 18 lakh 13,200. Total becomes 20 lakhs 53,200. From this we deduct creditors at the end, and last item is cash paid to suppliers. This is your working note 3, which we have indicated in cash from operations statement. Now you see cash paid for operating expenses. This was working note 4. Outstanding expenses at the beginning. To that we added operating expenses charged during the year. Total becomes 1,04,000. From that we deduct outstanding expenses at the end, rupees 48,000, and cash paid for expenses 56,000 rupees, as we have shown in the earlier statement. Now working note 5, how much amount we paid for tax. Tax payable at the beginning, then we added provisions for taxation. Total we got. From this total we deduct tax payable at the end, and balancing figure comes 86,800. So these all are working notes which were part of cash from operations under direct method. Now we will see the solution as per indirect method. See please. Cash flows from operating activities under indirect method. This is the main heading. First item here we are starting from net profit before taxation and extraordinary item, as was illustrated in exhibit 2. This we are taking from the illustration 72,000 plus 88,000 rupees. Total comes 1,60,000. To this we add depreciation 60,000 rupees given in the question. Then operating profit before working capital changes, as I explained to you while explaining exhibit 2. It becomes 2,20,000 rupees. Now adjustment for changes in current assets and current liabilities. You will see increase in debtors 18,000 rupees, decrease in stock 1,66,800. What is negative item? We have written in bracket. What is positive item? It is written without bracket. Decrease in creditors 6,000 rupees. Increase in outstanding expenses 24,000 rupees. The basic idea which you should keep in mind: if any current asset increases, it will result in the inflow of cash. If any current asset decreases, then it will result in the outflow of cash. So this applies to debtors and creditors. Creditors, if they decrease, it is reverse of current assets. If creditors decrease, then it is payment to them, it is an outflow item. That's why we have written this in bracket. Increase in outstanding expenses, this is considered inflow. So cash generated from operations 3,86,800. From this you deduct income tax paid 86,800. Now last item is cash from operating activities, rupees 3 lakh. Important thing to note is this: whether you calculate cash flows from operating activities as per direct method or indirect method, net result is the same. So as per direct method also we got rupees 3 lakh cash from operating activities. Here also we have got cash flows from operating activities 3 lakh rupees. Now we will use this illustration for the preparation of full cash flow statement. Please see this illustration. Balance sheets are given for 2 years, year 1 and year 2. All figures are at the end of the year. Share capital in year 1 was 70,000. In year 2 it is 74,000 rupees. Bonds, 10% bonds. In year 1 they were 12,000 rupees. Year 2 they are 6,000 rupees. Sundry creditors in year 1 10,360. Year 2 11,840. Provision for doubtful debts. In year 1 it was 700 rupees. In year 2 it is 800 rupees. Profit and loss account balance in year 1 was 10,040. In year 2 10,560. Total liabilities in year 1 1,03,100. In year 2 1,03,200. Now see the asset side. Cash and bank in year 1 9,000. Year 2 7,800. Sundry debtors year 1 14,900. Year 2 17,700. Stock year 1 49,200. Year 2 42,700. Land year 1 20,000 rupees. Year 2 30,000 rupees. Goodwill in year 1 10,000 rupees. Year 2 5,000 rupees. Additional information provided to you is dividend paid during the year 3,500 rupees. Land purchased during the year 10,000 rupees. Goodwill written off rupees 5,000. Bonds rupees 6,000 redeemed during the year. You are required to prepare cash flow statement for the year ended 31st March year 2. Now I give you very simple idea what we will be doing. First we will calculate cash from operating activities. Thereafter we will deal with all the items in the balance sheet one by one. If any item has resulted in the inflow, then it will be positive item. If any item resulted in the outflow of cash, that will be negative item, and they will be presented as per exhibit 1 or 2 showed to you earlier. So this statement is prepared in 3 segments. Now you see how we will prepare full cash flow statement. Now see the solution. For preparing cash flow statement for the year ended 31st March year 2. This is the format as was illustrated in exhibit. First item is cash flows from operating activities. All the items will be listed here one by one. Now net profit during the year 10,560 minus 10,040, because he has given you profit for the 2 years. So net profit during the year is 520. Dividend paid during the year 3,500. Goodwill written off. You will be better appreciating this when you see the working note. We prepare goodwill account, and there we see how much amount we wrote off by way of goodwill. It is 5,000 rupees. When we will see working note 1, it will be more clear. Increase in sundry creditors 1,480. Increase in provisions for bad debts, 100 rupees. Decrease in stock, these are all adjustment items, 6,500. Increase in sundry debtors, 2,800. Now, when these all items are adjusted, then you get cash flows from operating activities. This is segment A. Total comes 14,300. Now, this will continue further. Cash flows from investing activities, second segment. Land purchase, we can explain this in working note also. How much amount has resulted in the outflow of cash when we purchase land. Amount comes 10,000 rupees. This is the item under investing activities. Net cash flows from investing activities, B, total 10,000 rupees. Now you see the third segment, cash flows from financing activities. Issue of share capital, 4,000 rupees. All these figures we have got by comparing items given in the balance sheet in the beginning and at the end, or year 1 and year 2. If share capital increases, that is an inflow. If share capital redeemed or debentures redeemed, then it will be an outflow. 10% bonds were redeemed. Working note 3 will further explain this thing. It is 6,000 rupees. Dividends paid, 3,500 rupees given in the question. Net cash flows from financing activities, item C, segment C, 5,500. Now we add A, B and C. That will give you net increase or decrease in cash and cash equivalents. Plus item minus items all adjusted, you get 1,200 negative. To this you add cash and cash equivalents at the beginning of the period given in the question, 9,000 rupees. Now you get cash and cash equivalents at the end of the period. I think we have been able to understand how to prepare cash flow statement, both as per direct method and indirect method. Now see working notes which we have used in the preparation of this cash flow statement. Number 1 was goodwill account. Balance in the beginning was 10,000 rupees. Goodwill written off by way of charge to profit and loss account, 5,000 rupees. Balance remained 5,000. So this 5,000 rupees we have added back because it is not cash outflow item. It is only adjustment item. Now see working note 2, land account. This will show you balance in the beginning was 20,000 rupees. Closing balance is 30,000 rupees. It means this difference of rupees 10,000 is on account of purchase of land during the year. When you prepare any working note for each relevant account, wherever the item bank will come or cash will come, it will become an item of cash flow statement. If in the completion of account word bank or cash is not used, then this is an adjustment item, as you saw in the case of goodwill. In the case of goodwill, this was an adjustment item. In the case of land, this is an outflow item. So we are completing this account by writing to bank. If he had given this information in the question, well and good. If he doesn't give, then we will complete this account and balancing figure will be taken as inflow or outflow, and account will be completed by writing to bank or by bank. Now you see next working note relating to 10% bonds account. Balance brought forward was rupees 12,000 rupees. Closing balance is 6,000 rupees. It means bonds amounting rupees 6,000 were redeemed during the year.